Okay, let's start here. In Hefei, China, at the University of Science and Technology, there's a building. And inside that building, a team led by a physicist named Pan Jianwei has been working on something for over a decade. And if they succeed, well, their program would give the Chinese government a key to read every encrypted communication on the planet, a key to forge any digital signature, and yes, a key to drain any cryptocurrency wallet you can think of, all without warning and with absolutely no way to stop it.
So I know what you're probably thinking. That sounds like something straight out of a thriller novel, right? But before you write it off, consider this. In late 2023, a paper dropped from Shanghai University, and it claimed they'd broken RSA encryption, the bedrock of a lot of internet security, using a quantum computer with just 372 physical qubits. Now that number is way smaller than what most Western researchers thought was even remotely possible. You can bet that paper sent absolute shockwaves through the entire global intelligence community.
Okay, full disclosure, that paper, it turned out to have some pretty significant limitations. But that's not the point. The crucial thing here is that the method they used was completely novel. Nobody in the Western research community saw this approach coming. It came from Chinese researchers, and it was, frankly, more advanced than anything published in Western journals at that time. So make no mistake, this race is very, very real.
All right, so let's really dive into what this all means. The big question isn't if China has quantum computers. We know they do. The real question is, what does their classified program look like? And, what happens to the entire $1.8 trillion crypto market if China's the first one to break the cryptography that holds it all together? That's what we're here to do today. We're going to model that exact scenario for you.
First things first, we need to get a clear picture of what China's quantum computing program looks like, at least from the outside. When we're talking about a risk this big, this geopolitical, we have to be specific. It's absolutely crucial to separate what we know is publicly documented from what's just being inferred.
And just look at this. What's really staggering here is the sheer scale of the investment. I mean, the Chinese government's quantum tech funding under its current 5-year plan, it's publicly reported at $15 billion US. Now, to put that in perspective, the United States National Quantum Initiative, that's about $3.7 billion. The EU's program is €1 billion, spread out over 10 years. So China is outspending the West on public quantum R&D by a factor of 3 or even 4 to 1. And I have to stress, that's just the public funding we know about.
This right here, this is the core challenge for intelligence agencies. You see, every major nation basically runs 2 programs in parallel. There's the public track, the one with academic papers and flashy milestone announcements. And then there's the classified track, the one we never ever see. So yeah, we know about their public systems, like the 121-qubit Zuchongzhi computer. But here's the kicker. Analysts at the NSA estimate that the classified part of any nation's strategic tech program is routinely 5 to 10 years ahead of what they show the public. It's like the Manhattan Project, right? That was completely secret until, well, it wasn't.
So, with all this effort, what's the end goal? What are they all trying to build? A machine that can actually run? Well, it all comes down to this, Shor's algorithm. The easiest way to think about it is like a cryptographic master key. If you can get it to run on a big, stable quantum computer, you can pretty much break the public key encryption that underpins everything, not just crypto, but most of the modern internet as we know it. Now let's be super clear. The public quantum computers we see today can't do this. Not even close. The real question is, can a classified one?
Okay, so how does this all actually play out? We're about to do something you don't see very often in the crypto space. We're going to do some rigorous scenario planning. We're going to map out 4 completely distinct scenarios for the next decade, and these are based on what real intelligence analysts are modeling right now. And just to be clear, these are not predictions. Think of them as planning tools, maps for the future.
So here they are, the 4 futures we really need to wrap our heads around. First up, we have the gradual transition. This is kind of the base case with a 50 to 55% probability. The idea here is that powerful quantum computers don't really show up until the 2030s, which gives the industry plenty of time to migrate to new systems. Then there's scenario 2, China's surprise breakthrough, sitting at about 20-25% probability. This is where China achieves a secret breakthrough and boom, market panic. Third is Western preemption at 10 to 15%. In this one, the US gets there first, which leads to a more orderly, but still pretty volatile, transition. And finally, there's a scenario called the slow bleed, which has a 15-20% chance.
And I want to focus on this last one for a second, the slow bleed, because you could argue it's actually the most dangerous, the most insidious of all. Why? Because there's no big Q-Day announcement. There's no single event. Instead, a nation-state gets just enough quantum capability. They can't break every single key out there, but they can selectively target the biggest crypto wallets, the most valuable smart contracts.
It would be this quiet billion-dollar drain on the system that just erodes all trust. And there's no single moment of clarity that would force the industry to wake up and respond. So let's think like an attacker for a minute. If you had this partial capability, what would you target? You're not going to go after random wallets, right? No, you'd go after the biggest, most identifiable targets, the whales. Get this. The top 100 Bitcoin addresses hold roughly 27% of all Bitcoin in existence. 27%. So draining those wouldn't just be a huge financial loss. It would be a devastating signal that the entire mathematical foundation of Bitcoin itself has been shattered.
All right, so it's one thing to talk about the threat, but the really crucial point is to understand how a breach like this would actually move through the markets. So let's model the economic anatomy of a quantum shock. We're not talking about the cause anymore, we're talking about the transmission mechanism, how the damage spreads.
Okay, so it would probably happen in stages. It wouldn't be all at once. First comes detection. An on-chain analytics firm flags a weird anomaly, like a huge, dormant whale wallet that suddenly moves all its funds. Next is attribution. The whole community scrambles to figure out, was this a normal hack or is it something else? Third, the market reacts, and it reacts on pure rumor, instantly pricing in all that uncertainty. Then the protocols themselves would try to do emergency forks to stop the bleeding. Regulators would almost certainly intervene, probably freezing trading. And then, after all that chaos, you'd see a split recovery. All the capital would flee vulnerable assets and rush into anything that looked quantum resistant, creating a totally new market equilibrium.
And listen, if you take away only one thing about the market dynamics here, let it be this. You don't actually need a confirmed quantum attack to have a full-blown crypto market crisis. All you need is a credible rumor. That information asymmetry, the not knowing for sure, that's the real weapon. Just the possibility of a quantum attack, amplified by social media and the financial press, would be more than enough to trigger a massive market-wide crisis. It wouldn't even matter if a single key was actually broken by a quantum computer.
Okay, so we've laid out all these pretty scary scenarios. The natural next question is, what can an individual investor or a builder in this space actually do about it? Let's pivot now from the problem to the plan. We're going to outline some practical, concrete steps you can take to prepare for these potential futures.
First up, on the monitoring front, you need to follow the source. Go read the publications from NIST, that's the National Institute of Standards and Technology, on post-quantum cryptography. Pay attention to the cybersecurity advisories from the NSA. From a portfolio perspective, you need to make sure you have some exposure to assets with a clear, credible path to becoming quantum resistant. Think projects like Ethereum or Algorand. And finally, for your own personal security, and this is a big one, stop reusing addresses. And if you're using Bitcoin, use Taproot. It's an upgrade that boosts your privacy and makes your transactions way harder to analyze. These are simple steps, but they reduce your exposure starting right now.
You know, the whole point of this explainer wasn't to scare anyone. It was to give you a better mental model for a risk that, let's be honest, usually gets discussed in really vague terms and is almost never analyzed with any real rigor. If you can understand the anatomy of a potential quantum shock, it means you won't be the last person to figure out what's happening if it ever does. And in any market, being the last one to understand, well, that's where the real damage always happens.
So, we'll leave you with this question to really think about. In our next explainer, we're going to dive even deeper and look at exactly how you might construct a quantum-resistant portfolio. We're talking asset-by-asset analysis and concrete frameworks for allocation. So you're definitely going to want to make sure you're subscribed so you don't miss that one.